Hello everyone. Of course, today we have the employment data in the US, non-farm payroll, unemployment rate. So stay tuned to see how these very important numbers will affect the markets. Hello traders, Khaled with you. Welcome to today's daily pitch, 4th of April 2025. Let's dive into the latest economic events, technicals, and see what's moving the markets. Of course, as usual, we will start with the economic calendar and see what are the most important economic events, the pre-planned economic events we have. Mainly the European session looks calm. Moving into the US session, we have some economic data for the Canadian dollar. And of course, the most important for today is the employment data for the US, the non-farm payrolls, the unemployment rate, and the average hourly earning. Looking at the unemployment rate, as we can see that the unemployment rate has been almost stable for some time, fluctuating around the 4%, 4.1%. The market expectations are at 4.1%, similar to the previous and no change. Looking at the non-farm payroll numbers, this number here is seeing a fluctuation. We mentioned in yesterday's video, the breaking one, that the November report was a one-off report, and it is mainly related to the hurricane that was taking place back then in the US, in addition to the workers' strike, and mainly for Boeing. That's why we saw this very low number. Okay. Currently, the forecast have changed a little bit since yesterday, and previously it was at 151K, and it's expected to drop to 135K. Looking at the average hourly earning year to year, of course, as we can see as well, it is around the 3.9%, 4%, and the forecast is a slight drop. Moving on to the charts. Starting with the US dollar, of course, the US dollar, so I mentioned yesterday, is strong drop. This is mainly due to the fear in the markets and related to the last speech for President Trump for the reciprocal tariffs. That's why we saw this drop and this break below the 101.5 level. Currently, the DXY is just retracing a little bit, gaining some strength. Of course, the markets currently is waiting for the employment numbers in the US. So we could see the DXY doing this, maybe testing this area. And if we have lower than expected economic data, we could see it dropping, retesting this level again. And if the numbers are really bad, unemployment is high, non-farm payroll is even lower, we could see it testing the 100 key level. That's in general. If the numbers are good, I believe we can see the DXY just breaking above this level and trading back into this consolidation area that was holding for some time. Looking at the treasury yields, the US treasury yields also dropped, currently below the 4%, and the 4% is a psychological level, of course. So same expected move as the US dollar. We will have to wait and see. Going to the VIX, the volatility index or fear index, is still moving higher with all the uncertainty in the markets. So the fear is still there, and of course this will be reflected on the US equity. Let's have a look at gold. Gold showed us a strong profit-taking move from the all-time high it printed previously. And what I mean previously is after President Trump's speech, gold printed a 3,165, 170 approximately, and then we saw a very strong profit-taking move. Why this move happened? I believe this move happened because the markets were already pricing in, and the gold already priced in all the tariff headlines, the economic uncertainty. So it reached this level, and then profit taking happened for buyers to jump in into better price positioning. Currently, gold is trading at 3090, 3100 approximately. Let's draw some important levels and see where we could have some possible reaction. The first area, we already have it here at 3055, where yesterday the price tapped it and moved higher. We could also draw this area as well. This one, we can move it a little bit higher. And we can also okay, looking at gold. From now, of course, these possible scenarios are until the employment data. And whenever we have the data from the US, the movement on gold or any other pair related to the US or US equities will be depending on the numbers we have. Gold could go to the 3080, see a consolidation and just keep trading into the range until the NY session. On the other hand, if gold was to break lower than the 3075, we could see it retesting again yesterday lows at 3055 and just consolidating in this area before potentially moving higher. Another possible scenario for gold that could take place, if gold was able to break above the 3100, it is an important level as well. We could see it testing yesterday New York high at around 3130 and consolidating like this. Today, during the NY session, if we see numbers that are lower than expected related to NFP and the unemployment rate is higher, this could trigger additional fear in the markets, putting negative pressure on the DXY and giving gold push up. When we say push up, we could see gold breaking the first area of 3130 approximately, testing the 48 and potentially testing the previous all-time high at 3167. If numbers were really below the expectations and more fear is added to the markets, this could be the fundamental catalyst that is giving gold the push up to break into new all-time highs, and the possible reactions will be at the psychological level at 3200. These are general scenarios for gold. Let's move to Nasdaq. Looking at the US equities, of course, we are having a sharp drop on the US equities. And as we mentioned, the VIX showed us fear, so the US equities will show us a drop. And these are all related to the reciprocal tariffs that we heard about yesterday. Currently, the Nasdaq broke below the 20,000 and it's trading at this level around 500, sorry. The question is, why did we see this sharp drop in the US equities? A lot of US companies manufacture outside the US due to cheaper manufacturing cost and labor cost. And these tariffs will cause additional pressure on these companies whenever they want to import these goods to the US. So that's why a lot of sell-off is taking place on the US equities. Speaking technical now, these are important levels to watch. We can draw here minor resistance as well. Price action that could take place is price just reacting here, retesting the 19,000, 19,100 and could be trading lower. During the day, if we have negative US data, this could bring more fear in the markets and we could break below the 18,500, and the next potential area to target is the 17,300. On this level, let's move to the 4-hour. We could see it on higher time frame. Several reactions here is taking place previously. On this level, as you can see, it was an interesting area for buyers to jump in and to be in a better price positioning. So we can watch out for the price action taking place and see if there will be any buy momentum. On the other hand, breaking above the 19,200, we could see price testing the 20,000 psychological area as well. These are the potential scenarios, what we can see on Nasdaq, just here, trading consolidation and or a fundamental catalyst to break lower or higher. Moving on to our next pair is the GBP USD. GBP USD saw a strong bullish momentum. This is mainly supported by the weakness on the US dollar. The price was able to break above the 1.3 level. See here, we have an intraday clean break. Currently it's retesting, and the possible scenarios we could see and price action is a price consolidating here before moving higher, and the first area to target will be the 1.32 approximately. If we have more momentum, more pressure on the US dollar, this could give us the additional momentum to test the 1.346. On the other hand, if we have the US data today supporting the US dollar, giving more strength, this could be the trigger to break lower and testing the 1.275. Just having this scenario, and the price keep trading in this consolidation range until we have the next fundamental catalyst to see. Breaking below this area as well, if we have more sell momentum on this pair, more fundamentals supporting dollar strength, we could be testing the next target of 1.25. These are as well the possible scenarios we could see today, mainly after the US economic data. Hopefully you enjoyed this analysis. Stay tuned and see you soon.